Thank God it's Friday. Welcome to Friday Business, 55 minutes of current and relevant business conversations right here on Business Morning, and you can only get it on Channels Television. I'm Ini John Mekwa. We get right into it at this time and tell you that oil extended losses on Friday, further receding from this week's 10-month highs, as fears about the health of China's slowing economy and stronger U.S. dollar wiped out the gains triggered by supply cuts from major producers, Saudi Arabia and Russia. And Brent crude futures dropped 41 cents, that's about 0.5% to $89.51 a barrel, while U.S. West Texas Intermediate crude futures declined 50 cents, as about 0.6% to $86.36 a barrel. Both benchmarks reached 10-month highs earlier this week on concerns about potential shortages during the peak winter demand season after Saudi Arabia and Russia extended their voluntary supply cuts to the end of the year. China's overall export and import fell in August, according to data showed on Thursday, as the twin pressures of sagging overseas demand and weak consumer spending squeezed businesses in the world's second largest economy. But China's crude imports surged 30.9% last month as refiners built inventories and increased processing to benefit from higher profits from exporting oil. A bigger than expected draw in U.S. crude oil inventories lent muted support to oil prices. U.S. crude oil stockpiles fell for the fourth consecutive week, with inventories down more than 6% in the last month as oil refiners run at high rates to keep up with global energy demand. Energy Information Administration data provided that information, and crude inventories fell 6.3 million barrels, triple the 2.1 million barrels drop that analysts had expected. Still talking oil, but Malaysian palm oil now, the futures were set for their first weekly drop in 4 as the market fell further on Friday, dragged down by weakness in Dalian and Chicago Board of Trade rival oils. The benchmark palm oil contract for November delivery on the Bursa Malaysia Derivatives Exchange lost 32 ringgit to 3,800 ringgit. That's about $812 per metric ton in early trade, hitting its lowest level in more than 3 weeks. Dalian most active soy oil contract dropped 1.27%, while its palm oil contract slid 1.15%. Soy oil prices on the Chicago Board of Trade fell 0.34%. Malaysia's palm oil inventory at the end of August likely jumped to a 6-month high at 1.89 million tons as output rose and exports slowed, according to survey by our traders. Grain now, Chicago soybean prices were on track for a second consecutive weekly fall on Friday, as expectations for large harvests in Argentina and Brazil offset concerns about a heat-damaged crop in the United States. Corn was set to end the week firmer amid expectations of lower U.S. production, while wheat also edged higher. Most active Chicago Board of Trade soybean futures were roughly unchanged at $13.59 for a quarter of a bushel. That's down 0.7% for the week. Corn rose to $4.87 a bushel and was up 1.1% for the week. Wheat on its side gained 0.2% to $6 for three-quarters of a bushel, was up nearly 1% so far this week. The Buenos Aires Grains Exchange on Thursday forecast Argentina's 2023-2024 soybean crop at 50 million metric tons. So that's more than double of what last year's level was, and the most for 5 years. That came a day after Brazilian Food Supply Agency said that Brazil should produce a record 154.6 million tons of soybeans and export almost 97 million tons in the 2022-2023 cycle. Argentina and Brazil are major agricultural exporters. Soybeans rose in August as hot and dry weather in the U.S., another major exporter, damaged crops at a stage of their crucial development. Let's come to Nigeria now and give you some update that Nigeria has recorded a foreign trade surplus of 1.3 trillion naira, as total trade reached 12.74 trillion naira in the second quarter of this year. That's according to the latest report from the National Bureau of Statistics. A breakdown of the NBS data showed total exports for second quarter of 2023 increased by 8.15% to 7.01 trillion naira from 6.48 trillion naira recorded in the first quarter, while the total imports rose to 5.7 trillion naira from 5.5 trillion naira. Netherlands led the top 5 export destinations in the second quarter, while China emerges number 1 on the top 5 partner countries in terms of imports. Still in Nigeria, the Lagos Chamber of Commerce and Industry, the LCCI, has asked government to create an enabling environment that will encourage sustainable agricultural practice among smallholder farmers across the country. The president of LCCI, Dr. Michael Lawale Cole, who made this known at the 2023 LCCI Agro Fair and Symposium in Lagos, explained that this will also promote the practice of agribusiness entrepreneurship by interested individuals.
As we gather here today, we must acknowledge the progress as SCCI members we have made in agriculture and agribusiness in recent years. The resilience and determination of our farmers and entrepreneurs have resulted in noteworthy advancements. We have witnessed innovative approaches, technological interventions, and policy reforms as a result of the SCCI serious advocacy that have propelled our agri sector forward. However, challenges will persist, and our journey towards achieving holistic food security is far from over. Today, we must commit ourselves to fostering an environment that encourages sustainable agricultural practices that support smallholder farmers and promote agribusiness entrepreneurship.
Of course, food security, agribusiness, very important for Nigerians. Also is our natural mineral resources. That's what we're going to look at this morning with the National President of Miners Association, Mr. Dele Anyoleke, joins us virtually from Oyo State. Mr. Anyoleke, good morning, and thank you so much for your time. I know you were on Channels Television I think about 2 weeks ago, and so the issue of the minister, your minister, Mr. Anyoleke, is no longer news to you. You have expressed yourself on that, but what are some of the very first steps you think the minister should be taking even as we speak?
Thank you again. Thank you this morning for bringing me on board. You are right. We want to welcome the minister again. And if you are, I'm not very conversant with the fact that at the beginning of the week, the minister came up with his first press briefing. And of course, he talked about the 7-point agenda for this present administration. Well, what we actually expected, because like you, everybody knows that there are a lot of legacy challenges in the mining industry. And the one other thing that we should know is that the industry is generating a lot of attention at this point in time. And there are a lot of conversation, especially right from the last administration when the government planned to diversify the economy through mining and agriculture. And also this time around, this new transformation agenda is what we have on board now. And I think it's just to complement what was started during the last administration. So, and as a matter of fact, among the many challenges that have been on ground, the issue that is generating a lot of attention now is about this issue of the challenge of regulation, where we have a lot of state governments wanting to contest the issue of regulation with the federal government. As everybody knows that mining is in the exclusive list. Of course, we cannot take away the fact that there are a lot of issues that the state also need to participate. but we think that their participation should follow the laid down rules, the laid down regulations, and the legal framework that have been on ground. So we expect our new minister to first of all tackle this and make sure that there is a streamlining of the regulatory and legal framework that has been on ground. If there is any need for review, of course, why not? We are running a democracy, and if there is need for a review, so that everybody will fall in line, everybody will stay within its bounds. Because this is an industry that is expecting the measures, because out of the 7-point agenda, one is that the government wants to partner with the multinationals to develop the sector. So, but the way that this confusion in regulations, I don't think that will be a good incentive or the measures for the multinationals to actually come and invest in Nigeria. So we expect the minister to first of all face this issue of regulation, so that every level of governance will fall in line with our present regulatory regime. And if there's any review, then we should do that one democratically.
So what review would you be expecting? Which one you think would be beneficial to the industry, the growth of the industry?
Come again, please.
What kind of review of the policy do you think would be beneficial? We've seen a change, in the electricity sector, for instance, where states can now generate and distribute electricity. So, and of course, we have mining in the exclusive list, as you have noted. What kind of review do you think would be beneficial for acceleration in the industry?
Well, the kind of review that we will want to, you see, like I told you, any mineral, whether solid, whether liquid, they are under the purview of the federal government. And of course, you know that this country, this nation, we have benefited a lot from the oil and gas sector. And of course, when you also look at it, this is domiciled in some parts of the country. There are host communities that own this oil and gas. And now that the attention is now being focused on solid minerals, whatever review that will come on board, we have to make sure that all the stakeholders, especially the states, the local governments, and even the host communities, of course, there are a lot of benefits, a lot of policies on ground that outline the benefits according to all this level of governance. But if there's any need for us to review, so that everybody will stay within bounds, so that there won't be any confusion again, so that when the federal government is regulating the sector in one way, the state governments will also be regulating with multiple standards. This is what I say. There should be a standardization of the regulations that will have the buy-in of all the stakeholders. This is what we are saying.
All right. And do you think there's also a need for review of policy to handle the issue of illegal mining, unreported exports of this crude solid minerals?
You see, the issue of illegal mining, of course, there are always, when you go to our statutes rules and all our policies and regulations, there are a lot of things on ground, there are a lot of procedures on ground to checkmate all this. I think what we need to do, because take for example, when you are talking of illegal mining, the attention is always on this artisanal mining, and of course there are illegalities in every facet of the industry. So if you are talking of these artisanal miners that are always around, that are so mobile, so nomadic in nature, moving from place to place, scavenging for what they can get on ground to sustain their living, there are a lot of policies. The government, through the ministry, and the department, there's a department in the ministry, which you call Artisanal and Small Scale Mining Department, that is trying to formalize all these artisanal miners into cooperatives. I think with this, there's also the issue of the mine surveillance task force. The minister actually made mention of it. These task forces have been on ground. Sometimes in 2018 or thereabout, the ministry actually launched the surveillance task force in all the states of the federation. So I think this kind of a body on ground, the state government can assist the federal government by way of improving the capacity of all these task force, so that we're going to checkmate all this illegality and even banditry that has been the bane of the industry in the recent time. So this is what we are saying, and I think presently there are a lot of measures. All we just need to do is let us dust our status rules, let us dust all these our policies, let us look at the way by which we can operationalize all these structures that have been on ground, so that all this issue of illegality can at least reduce to the barest minimum.
All right, thank you so much. We really do hope this renewed attention given to the solid minerals industry will yield fruit in no distance time. Thank you, Mr. Dele.
I hope so. Thank you very much.
Yeah, Mr. Dele Anyoleke, National President of Miners Association. I wish you a safe trip back.
Thank you very much. Thank you. Bye-bye. All
right, not very good news from the manufacturers, so to be more specific, the consumers industries in the country. A lot of exit news we're hearing there. We'll delve into that and a whole lot more after this break here on Business Morning. So stay with us. Welcome back. PZ Cousins has joined the likes of GlaxoSmithKline to announce plans to stop operations in Nigeria. So while banks seem to be counting their gains with the foreign exchange unification policy of the central bank, companies in the manufacturing sector, and especially these days in the consumer goods, are counting their losses and exiting the country. Perhaps it's not just the FX unification policy that's affecting them. We have Mr. Emmanuel Onosami, lead partner at Cardinal Professional Services in the studio, joining us for this conversation. So Onosami, thank you so much for your time.
Thank you very much,
this morning. Yeah,
it's good to see you again.
Good to see you too. Even though it's not very good news, especially from the consumer goods these days, we are still waiting for GlaxoSmithKline to share the scheme of exiting their shareholders, and then we have the one of PZ Cousins.
You know, and the manufacturing sector is the biggest player when it comes to the real sector that we're talking about. And when we talk about development of any economy and the sustainability of any economy, is how well the real sector is doing. You know, so if manufacturing business are struggling in Nigeria, it's something that should require a state of emergency, you know, from the government. Looking at the numbers, you know, it started sometimes in January, you know, when the Naira started, you know, fluctuating very heavily, you know, and it became unsustainable for the CBN to continue their management activities of the Naira, you know. Then after the announcement by the, you know, by the president for the unification, and then the subsequent, you know, communication from the CBN, it then became a free fall. Although, you know, analysts has put it that is a good policy, you know, that may pan out to be very good in the future, but the immediate effect of it during this gestation period of the policy is actually, you know, leaving the manufacturing sector in a bad shape. If you look at, you know, the numbers and running through the statistic, you know, performance for the first half of the year, you know, dipped by over 350% in that sector. You know, if you are a shareholder in that sector, you should not be expecting any dividend this year, you know. And, you know, that's, if you dig deeper, you will see that the biggest cause of that is the foreign exchange impact arising from commitment to loans. You know, manufacturing sector, you have a lot of debt. you are taking, you know, both foreign debt and local debt. You know, but the translation error will come definitely from the foreign debt portion of the loan. Also look at other obligations towards their, you know, maybe parent company, the use of intangibles, the trademarks, and all that. So it leaves. Although if you look at their results, some of them said they still have cash to do business because they've not paid those obligations yet. But when they pay those obligations,
including the CBN.
You said?
Including the CBN.
Yeah. So they still have cash for operation. Most of those multinationals, or the like of Nestle, Cadbury, you know, they will have cash for operation. But from a profitability standpoint, you know, it's not just looking very attractive.
Is there something that should have been put in place before that announcement of the unification? Because even as we speak, I think in the official market, we still have Naira for about 700. Meanwhile, the parallel is about 900. So we still do not have a unified market yet.
Okay, so, some people have argued for managed floats, while some people
I
have
think we're
argued...
still managing floats.
Yeah,
the CBN still intervenes, so it's a managed float.
So if what is in place is a managed float, it has not really helped the manufacturing sector based on what we are saying. Do you understand? Because if it's still a managed float, as communicated by the CBN, like you alluded to, that means that there need to be some other intervention from that sector, because what it means that the CBN cannot manage it effectively to keep this sector floating. You understand? So other things that shareholders in that space or players, investors in that place are advocating for is the possibility of granting some short-term waivers for that industry, so that you can still maintain the attractiveness of that industry. Otherwise, more people may be making the decision to leave the environment while we are still looking for other foreign direct investment into the economy. So there may be need for some short-term intervention, maybe a tax holiday for a period, just to cushion the effect in that sector, or maybe some other waivers that the government will consider for that particular sector.
Yeah, but waivers when the government is looking for revenue, it's also a difficult one.
Yeah, so it's a balance. You understand? You cannot, in a bid of looking for revenue and then shut down everything. The revenue will stop. You understand? So going concern of business, especially in the risk sector, and not just about revenue alone, these people are the people that employ the majority of Nigerians. So if you are going for revenue at the expense of their survivor, then you have more people on the street looking for jobs. And looking at our unemployment rate, although it has been recalibrated, it's still something in the street that we know that we need to get people in the proper working environment. And these guys are the one filling the gap for us. So it is something that the government needs to deliberately look at. I know that Mr. Wale Edun, the current Minister of Finance and coordinating Minister of the Economy, is well versed, is experienced, and these are areas that we need to look so that we don't send potential investor away looking at the numbers from that sector.
Yeah, it's good you mentioned the minister's name now, because when you talk about tax reform, then we think of Mr. Taiwo Oyedele and his committee. Yeah. But of course, because it has to get the cooperation of other sectors,
they have to work together.
So then the coordinating minister has that responsibility, because even if the tax reform committee has a great idea, because it's going to affect revenue of government, you do need some conviction. Exactly. So there's a lot of coordination to be done, if we have to get it right. And it's really a sensitive time for the country, that any wrong step could move the country very far away from peace and prosperity.
Yeah, personally, they cannot do it in silos. And that's why, both the coordinating Minister of the Economy, Ministry of Finance, and other key ministry in the economy, they have to come together with Mr. Taiwo Oyedele's team, and look at it from an holistic perspective. We want to encourage FDI. We want to increase our tax revenue. How do we strike this balance, to still get things running? I strongly believe that the policy of the CBN is to float the naira. I am an advocate for full float, but to the extent that government is committed to responding to the critical sector of the economy and provide some of specific incentives that will keep those aspects of the economy going.
Yeah, I guess the other side of the conversation will also be, they say necessity is the mother of invention. Sure. If at this time the country is being squeezed for FX, it should also motivate people or companies to look inwards and see, instead of demanding some of these ingredients or raw materials from outside the country, are there things we can easily produce to fill in these gaps?
Yeah, give it to the manufacturing sector in Nigeria. They've done a lot. There was a time that the CBN actually, mandated some backward integration program before you can access forests. And a number of these people have invested in that process. We cannot mention that. A number of people have substituted their raw materials where it's available in local quantities, And it's a going conversation. We cannot get there in a jiffy, Looking at our agricultural sector, it has not fully matured to cater for the input need and also other allied and chemical industry has not fully matured to cater for the input need in that particular industry. So reliance of imports will still be very significant. But what we've seen players within that industry does recently is that they are making moves to hedge. You know, if I'm going to be committing to some dollar or forex obligation, can I possibly hedge? And they are looking towards the financial institution, and the financial institution is also, where am I going to get a fund? You know, and you can see Fidelity Bank in the news yesterday making an attempt to raise additional capital to see whether they can assist with some hedging, you know, as part of the strategy to keep the system running. Also, First Bank is also in the move of raising additional capital. You know, so those we just have to be creative, and the government supporting to ensure that the sector keep running, because this sector is the rich sector that needs to continue to run.
Yeah, well, we saw promises from the president's trip in India. We'll be getting numbers and news releases, you know, of billionaires, Indian billionaires who want to come to the country. But I wonder how fast we can have that, because the $3 billion loan crude that we got, I think that has waned off. So we need a more sustainable investment that will build in the country.
So, Ine, you are very spot on that. You know, yeah, we love the news, you know, those news to break. Oh, India is coming in with investments. NNPC has signed a $3 billion, you know, with Afrexim Bank, you know, but the implementation of this thing has to also be fast-tracked. You cannot leave it on the page of paper when the economy is suffering. You know, so the government has to be deliberate enough, make enough communication on how to implement this and how people can access it, you know, and what are the criteria to access it so that the economy can continue to run. You know, as of today, you know, it's evident out there that we need some serious emergency intervention.
All right, well, we do hope to get it real soon. And we have ministers that have been sworn in now. Everyone is looking out to them. We just talked about the solid minerals.
Yes.
And the whole promises. I remember the minister, Mr. Delalake, saying that Nigeria has no business being broke. And yet at this time we're broke. So I guess it's on him also to make a difference.
Yeah, we expect so much from this set of crew. One of the things that have been alluded to the president is his ability to select smart and intelligent people to drive the economy. And believe that when they get their policies, you know, and their strategic action into place, you know, maybe things will continue to move in the
And the president has also promised that, I mean, any minister that does not perform well
will be sacked.
All right, I guess that should be a motivation for the ministers to sit up. Well, thank you so much for your time this morning, Mr. Emmanuel Nosomi.
Thank you very much.
Thank you. You're the lead partner at Cardinal Professional Services.
Thank you.
Thank you for your time. All right, let's take a break now. When we come back, another sector comes into focus here on Business Morning. You're welcome back. The Nigerian Communications Commission has said that the telecom industry should be totally exempted from any excise duty, as the services being provided are not luxury services. Well, the Executive Vice Chairman of the Commission, Professor Umar Dambata, applauds the recent suspension of the 5% excise duty on telecom services and said it's commendable, but is asking for more, a total exemption from any excise duty. Meanwhile, the National Bureau of Statistics reports that active voice subscribers in the telecommunications sector increased by 13.33% to about 226 million in the first quarter of 2023 from 199 million reported in the first quarter of 2022. Well, let's delve more into some of those updates from the sector with Mr. Benedict Eguchukwu, Senior Research Analyst with AfriInvest. Thank you so much for your time, Mr. Eguchukwu. And this sector where we see improvement, but I thought everybody was already connected, you know, at this time. And now they're asking for more rebates when it comes to taxes at a time when the federal government is seeking revenue. That seems kind of contradictory.
Yes, that is actually true. I'll just quickly speak towards the voice call you spoke about. Yes, it's not actually surprising that we've seen an increase in the number of voice subscriber base go up between now and the previous year. As we are aware, due to the COVID period, as well as the NIM situation we had in the country, there was a whole lot of restriction on people who had SIM card because they had to register with their NIM system, and this actually caused a drastic reduction in the subscriber base of all mobile network operators, and they had to, work in close connection with the federal government to harmonize the NIM system of every individual with their SIM card. And as a result, we saw a decline in subscriber base. But a year later, what we've seen is an improvement in that region, given that some telecom operators have been able to, work alongside with the federal government to make sure that the NIM SIM registration period is as seamless as possible. And as such, we've seen an increase in the voice subscriber base we've registered on the NCC website. But if you actually do take a look at the figure for Q2 2023 as compared to where we were at the end of the year of 2021 and Q1 2023, you actually notice that we've seen a decline in the subscriber base. And if you take a look at the numbers particularly, you find out that most of at least the four major players within the industry is MTN, Airtel, Globalcom, and Nine Mobile. They've actually recorded notable increase across, but except for MTN, which actually saw, I believe, a 7.4 decline between Q1 2023 and Q2 2022. And the reason behind this is that they're actually trying to restructure some of their should I say, age requirement to achieve or get a SIM card. And I believe that age requirement falls between 16 to 18. So if you're below that, you will not be given a SIM card as such. And then speaking to the matter of the multiple taxation affecting the telecom industry, we are all aware that this is not only a situation that plagues the telecom industry, also plagues other industry, but for the telecom in particular, it is actually quite alarming. And it's not even something that we are seeing for the first time. This is an issue that dates back to a decade ago. The mobile network operators have been complaining about the multiple taxation system. And while yes, we do know that taxation is valuable for economic development, having multiple taxation that hinders development also kind of potentially will discourage investment within the sectors. And we also have to take into cognizance that the telecom sector, apart from just facing the multiple taxation, are also faced with other cost pressures that affects and stifle growth. Like we currently see the high inflation, given that cost of doing business is going up, but yet to date, the telecom operators have been unable to get an increase in price tariff across board, both for data, voice, and SMS. And apart from just the high inflation, we've seen supply chain uncertainties. I've also seen the impact of the FX liberalization, which took place around June, after the new administration took office. So all of this just pretty much dampens or hinders prospect for the telecom sector to go, and then adding this multiple taxation to it just kind of makes it impossible for people to even want to come into the sector. So at the moment, we're looking at the telecom operators are working in line with the NCC as well as the federal government to see how they can cut down some of those taxes, especially tax you just mentioned, the levy that is being tried, the excise duty levy that is being trying to replace on the telecom sector. Look for how they can be exempted for it, because currently at the moment, while the telecom sector continues to remain resilient in the economy, they still face considerable pressure.
But when the telecom sector is asking to be exempted from excise duty, and manufacturers also want some relief, at the end of the day, who's going to pay the tax, and how's the country going to fund itself?
I mean, like, you make a valid point, and like I mentioned earlier, there is no problem in making taxes. And while the excise duty, if the excise duty is to be placed on the telecom industry, there are some other taxes that have been levied against that industry that should be withdrawn, because currently at the moment, some of them are just duplicate upon duplicate. Some of them do not need to exist at the moment. So the problem may not be the excise duty. If that is to be placed, I believe that the NCC along with the federal government needs to revise or look into all the other multiple tax charges being levied on the industry and see how they can, make things or prepare, or rather present a greater playing field for the industry players as well as investors looking to come into the industry.
All right. What about the issue of internet penetration? We also see that total number of subscribers was up about more than 8%. A good one. Does it mean we are overcoming those infrastructural challenges, or is it just people being determined to get on board, and get on the internet?
Well, there are a lot of factors that actually come into play here. Currently, at the moment, we are all aware that voice calls have been declining, not the subscriber base in itself, but the voice calls. If you take a look at publicly listed companies like MTN and Airtel, you will notice that their voice line revenue have been declining on the basis. While they've been recording double-digit growth, it has been slowing down every single year. And what we've been seeing picking up in that case is the data revenue side. So we're seeing many more people switch over to the use of data, switch over to the use of over-the-top services like WhatsApp, Telegram, and then other voice communication or video communication services like Skype, team calls to enable them with their everyday activity, given that data is much cheaper than using voice call. So the increase we are seeing in the internet penetration actually aligns or falls in place with the growth, or shall I say, the dimension we've seen people take, or shall I say their preference, consumer preference has actually changed from voice to data, and people are more reliant on data in order to access or communicate with people. And not only that, speaking of economic factors such as the cost, like I mentioned already, voice cost compared to having data calls, people probably would prefer to use WhatsApp call to reach relatives or friends who stay outside the country than to use or rely on voice call where they have to incur roaming and interconnect charges. And then obviously, we've also seen improvements in network quality. There's a lot of investment that have gone into the industry in order to bolster network infrastructures, not just for the 2G, 3G, but also 4G, and recently the 5G, especially MTN. And we're already aware that Airtel is currently working on its 5G infrastructure. And once that is up, we expect more individuals to actually, at least those within the Airtel spectrum, to tilt towards the 5G if they're not already on the MTN 5G network. So all of this actually supports the increase we've seen lately in terms of internet penetration.
Yeah, I guess there are many faces or many sides to the Jackpot syndrome. So with more relatives abroad, more people switch to things like WhatsApp to be able to communicate at lower charges. But what do you see, for the next half of the year, the last half of the year that we have already started? Do you still see an increase? Do we see more changes, or is there more of stability now?
Sorry, more changes within the sector?
Yes, like do we still see more subscribers jumping on both the voice and the data platforms? Or do you think we have gotten to a kind of a stable level now where people just maintain what they have?
Oh, no, definitely not. We actually do expect subscriber base to continue growing. At the moment, currently, we are over 200 plus in the country, and subscriber base is within, I believe, around 220 something, 226 million thereabout. And what this alludes to is that there are still an individual can possess up to 4 SIMs and of the same network, and that's why we see that number increase as high as it is. So there's still a whole lot of underserved population within the economy, both in the rural area and places where network has still to this day not been able to get through, maybe due to some regulatory restrictions or due to some vandalism and activities that prevent telecom operators from moving into that place. So we still expect subscriber base to grow. Moving on, we don't expect that to stifle. The only issue we'll be seeing in terms of the telecom sector is when it comes to the FX liberalization, which has actually taken its toll on the telecom mobile network operators, at least those listed, MTN and Airtel. And if you take a look at MTN's half-year result as well as Airtel's first quarter for 2024 result, you find out that the impact of FX has hit them terribly well. We saw Airtel actually record a loss of about $151 million. And MTN, while they did record profit, I believe their profit fell year on year by about 29% thereabouts. So while we still expect revenue and top line to be stellar because of growing subscriber base, pending when there will be a review in price tariff, we still believe that in terms of interest in terms of cost, finance cost, we still expect that to hinder telecoms from delivering the stellar performance or the stellar bottom line we've seen in time past. However, as has been stated lately, this is just a short-term period, which we see going forward is going to alleviate, because we are not looking at the short term, we're looking at how this FX liberalization will help the economy in the medium to long term. But at the moment, telecoms are facing the brunt of it, but there are some steps or mitigations that are taking place to ensure that these FX devaluation losses do not continue affecting them as affecting their bottom line.
For that, so we hope that it gets better. There's more stability in the second half of the year. Benedict Eguchukwu, Senior Research Analyst with AfriInvest.
Thank you very much.
All right, let's move over to the market now and see perhaps Anita Edit will give us some more details from the telecoms. But I do know that FX is affecting everything in the market, including, good morning, Anita.
Well, yeah, I watched your conversation, quite interesting there to know about the Nigeria subscription. Of course, we have only two companies, telco companies listed on
the giants exchange.
The two big giants, the behemoths of the market. Surprisingly, they've not made that much impact in recent days so far this week. But
I think banking has been like on the top of moving the markets in recent times.
It's been on the center show of eyes, especially for the markets. Of course, that's where the liquidity is. But of course, when you combine the total capitalization of all those banks, Nigerian banks, is not equal to, it doesn't even sum up to MTN Nigeria or even Airtel Nigeria. But we will just leave that data for another day and focus on how we ended the trading session for Thursday. Thursday's trading session is 2 days forward, 2 steps forward and 2 steps backward for the market. Take a look at your board there, 0.30% pullback on the market's benchmark index. And it is slightly almost pulling away from the 68,000 points which we celebrated, but still Nigeria's stock market is still ranked among the top 20 best performing stocks around the world, and then second on the African continent. As well as the market capitalization, it also made a pullback of more than 111.7 billion naira. No thanks to profit taking, of course. When you put your money somewhere, if it's making interest for you, if it's making gains, you definitely would have to take advantage of those gains. So that's what's happening to the market. Nothing of the negative, but just a matter of pullback. Now, in terms of year to date, we're still very much comfortable above the 30,000%, about 32.84%. That's what we currently are in spite of the pullback. Let's move over to the other side of the market. We see there only the consumer goods counter was the positive side, which gained about 0.65%. But of course, that impact couldn't counter the losses from the 4 other key counters of the market, the banking, industrial goods, insurance, as well as the oil and gas sector. Now, let's take a look at the activity chart. In terms of the activity chart, we also saw a kind of a mixed picture there, a pullback on the volume of total volume of transactions carried out, and then an increase in contrast to what you had in the previous day midweek trading session for the market. We had 26 gainers against 30 losers, and negative market breadth. Now, let's talk more about the market with the Executive Director of Operations, as well as an equity trader at TLW Stockbrokers, Abdulrasheed Momo, joining us via Zoom now. Thank you for joining us, Abdulrasheed.
Good morning. Can you hear me?
Yes, I can hear you. Now,
okay, thank you very much.
Okay, so I have 2 questions for you now. Earlier this week, we saw about a month after GlaxoSmithKline, which is a UK consumer goods healthcare giant, announced its exit the exit of its Nigerian subsidiary from the Nigerian stock market. Now we also have PZ Cussons, which is also another UK or British consumer and personal healthcare stock, making its plan to leave the market amidst the rally that we're seeing in the market. Can you give us more details about this?
Okay, let's go to the basics. If you look at Glaxo, Glaxo did tell us, I think their profit margin was actually dropping in Nigeria. And we knew it was not only Nigeria, the whole of Africa. So they were actually winding up. And I would not say this is a surprise, because for the past 5 to 6 years, a lot of their production line has been closing down. I know stocks like company like Fitsin, which used to do a lot of produce for them had stopped. So the I don't know if SEC has. I don't think they've gotten approval from SEC on that so far. But basically, I think it's not only in Nigeria, so we cannot use that one as a basis. It's most of both of Africa where they actually have presence that they're actually winding down.
Okay, so now, okay.
Yeah, I want to. In terms of
go ahead.
PZ.
Go ahead, please.
Yes, PZ. If you look at PZ, yes, there might be delisted, but no approval yet. But I know one thing about PZ. PZ has a very big farm, I think, in Akwa Ibom. So I think they might be divesting and going to, I think, palm oil produce, basically. Because I'm looking at companies within the same sector. For PZ, workers, I think it's a form of divestment, and they just want to go private. They are not leaving Nigeria. They just want to go private. Just like companies like Nigerian Bottling, 7-Up did years back.
Okay. So one last question before I let you go. We've seen the all-share index this week cross the 68,000 points. We celebrated that, and then it's making a kind of a pullback. Now, we called you earlier the 50K man, but now I think I will be calling you the 70K man. Do you see the prospect of this market's index hitting 70,000 points within this month, or maybe it's later sometime in the year, or are we going to see a receding of the market index?
Okay, let us not be in a rush. When we look at technicals, how the market price action in the NGX has been is that when there's a consolidation, we expect a breakout. If you notice, the period of August, when the market started in August, the market was range bound. It tested the all-time high 66,371 thrice before it finally broke out, and it was confirmed. So this new rally we are seeing now, I think there was a pullback of 200 points yesterday. We're having about 100 gain now, 125 or so. We need to watch. I watch them based on breakouts. Yes, 70,000 points is possible. Even 80,000 points is possible.
Right.
And I can tell you that most of the stocks, if you compare the new highs now with prices of some of the stocks then, let me go to example, the banking stocks. What the banking stocks are churning out now, their financials, what they are churning out now, it was far more better than what we had then in 2008. But if you look at most of their prices, they've not even hit. Like stocks like Access were about 25 naira then. Zenith got about 17 naira. I'm not saying Zenith is going to get to 17 naira now.
Okay.
But with what we have, those ones, they must still give us time to push the market. So, and I don't believe in market moving high. There will always be a retracement.
Yeah.
So for us to hit those levels you are talking about, the market needs to, we need to calm down. I think the financials coming up might trigger a new set of rallies.
Okay.
So,
Okay.
So all I can tell is that we are still in a bull market. We're in a bull market.
Okay. So thank you so much, Abdul Rashid. We really appreciate that analysis, giving us more details about Nigeria's stock market, which is a barometer of the economy. So that was Abdul Rashid Momo, equity trader and executive director of operations at TRW Stockbrokers, giving us details about the market. So that's it for the stock market, and we're hoping that it ends the week in the bull.
We hope so too. Thank you so much, Anite. All right, now let's move to the crypto market and see how that's looking. Ladi is not on today, so I'll have to wear that cap. And if we could see what the market looks like this morning, that's the crypto market. Yeah, that's we see that it's not just the NGX that's recording a bit of order. Well, can I say they're in the bull market? I don't know. I guess we'll have to tell us that. But we see Bitcoin again almost 2%, 1.76. Ethereum also is in the positive. The major coins we see have recovered a bit. XRP is down, but let's look at, do we have the market sentiment to see what index we have at this time? The market, there you have it. It's fear. It's not yet neutral. Perhaps it's moving towards neutral, all things being equal. But let's have our guests now to tell us behind the scenes of all of these numbers for this morning. Michael Naji joins us from New York. Hi, Michael. Good morning.
Good morning. Hi, Annie.
Yeah. Is the danger, is it over? Are we recovering, or this is just, a breath of fresh air?
I think it's a breath of fresh air, but mostly as a result of the good news that we got from the FASB, the Financial Accounting Standards Board, which is the governing body of the accounting standards for the SEC. They basically came out and said that Bitcoin is going to go from an intangible accounting measuring to fair value, basically meaning that Bitcoin on corporate's balance sheet will be marked at market basically at the end of the business day. So this will be good for a lot of financial institutions like MicroStrategy that hold Bitcoin on their balance sheet, and it will help them in regards to information being delivered in a more positive light. Because right now, intangible, if you get a markdown, you mark it down, but you can never really mark it up until you sell. Now they can finally mark it up if it starts doing well. So this is very positive news for the entire ecosystem, and definitely a catalyst for us to have gone up.
Yeah, so how does this affect, I hear of institutional investors and traders. What about the peer-to-peer, the ordinary investors? Does this have any impact on them?
No, this is mostly all just corporate legalese in terms of refining how corporate entities can basically report their earnings from Bitcoin and other digital assets more cleanly, in line with what we're used to with stocks and other things that they hold as treasuries on their balance sheet.
All right, what do you expect over the weekend? Do we expect this impact to also wane off? Do we still see positive movements over the weekend?
I think most of the positive effects have waned in the last 24 hours of this move, but we will still see the same bouncing around. I think most likely what ends up happening is in the next couple of weeks, we get down to somewhere like 20, maybe 19. But I think the end is almost over for this bear market. We're a couple of months away, and it's finally done.
All right, Michael, thank you so much for that. And do have a great weekend. We hope the market also has a great weekend too.
You too, Vinny.
So that's it on the program. Thank you so much for being a part of 5 days of current and relevant business conversations. We'll start the cycle again on Monday, but do remember 7 p.m. tomorrow, Laddie Williams will be here with Capital Markets. Interesting things, especially that PZ Cousins planned exit would also make it right there, so you don't want to miss that program. I'll be back at 1:30 for Business Incorporated, update from the world of business. I'll give you that in a couple of hours. I'm Amy John McQuarrie.